Hello and welcome to LedgerCast. My name is Brian Krogsgaard here with Josh Olswich. Hey, Josh.
Mr. Brian, good to be here on this bloody week.
Bloody week. It's a new year, new pain.
Pretty much.
I'm glad to be here with you though. Back in action. We're going to do a predictions episode today. Let's go ahead and get that out of the way. Let the folks know that we're going to talk about what we expect might happen in 2022. Will it be up only like 2021 was, or will it be a little more muted? It's a nice way of saying bear market. We'll find out. We'll find out today. In the meantime, I just want to say thanks for everybody listening to us for the last, it's 2018, 2019, 2020, 21, 4 years plus a couple months in 2017. So this is, we're going on our 5th year. Is that right?
What is that, a paper anniversary? What is that?
It's not, I don't know. I'm just saying, I just thought of it. We're heading into our 5th year of recording together, which is kind of insane. I'm glad for it. I hope someday we'll be able to make it and actually stop podcasting.
We better keep podcasting this year, I think.
Yeah,
because,
seems like
because wow.
It's
now, you said before the call started, 5 seconds before we got on, you said, I think we're in a bear market. That's what you said.
I said, I think the likelihood is that we are in a bear market.
Okay. Now, why do you think that? What do you feel inside, Brian?
It's not even what I feel inside. It is, how often does the market fake us out on certain things? And we had already done it in Bitcoin, to be honest, and then we danced around. But we have flipped the weekly 20 now on both Bitcoin and Ethereum. Ethereum was acting more like 2017 Bitcoin. And I think that we've broken trends, both 20-week and 200-day, to the degree that the market now needs to prove that it's not a bear market. You know what I mean? Like, it can still be a bull market, but it needs to prove it's not a bear market. And therefore, the risk, in my mind, is now further to the downside versus when you're still maintaining trend, the risk tends to be that you're out in the continuation of a bull market, right? Whereas now, like, you can certainly change your mind, and there are some relatively clear areas, for instance, 4K ETH. Now that may seem absurd, like, oh yeah, if it goes up another 25% and then you'll call a bull. But that's like, your upside is 6 to 10K ETH at least, in my mind, anyways. So will I give up 25% for that, especially if the downside potential is like sub 2K? Another 50% reduction in your buying power with Ethereum. And if you're in anything else, your downside is much greater. For instance, if you were in Solana, I can't find it right this moment. There it is. It's at $140 after a top of $250. And its next weekly support is at $50. Now, will it make it to $50? I don't know. Will it make it to $50 quickly? Probably not. But can it go to $50? The chart says that it absolutely can. The chart says that that's another 66% down from current levels, not from where you entered. Because if you entered right now, you're in at the relative lows, and maybe it holds. Like, maybe you point at that, right? I got daily supports on there. Maybe you say, okay, look at this. That's weekly support. It'll be fine. If this is not the bottom, then where the heck is the bottom? You have 4 expansion weekly candles that it could just engulf right back down through. So, yeah, in my mind, the market changes sometimes, and the market is telling us you either bottom right now. Or
right this minute.
Literally, I mean, yeah, literally, like, it's Friday.
I'm going to turn this car around.
Turn this weekly candle into something not absolutely, completely disgusting. Or wait until it reverses trend to the upside. And if it doesn't, then the risk is to the downside. The risk is 30K or lower Bitcoin. Honestly, what would be funny, Josh, is if we got below 32, like if we were in that kind of 29 to 32 range, that's the 2021 yearly open. If I go to a different chart, like how gross would we look at Bitcoin if it's like sitting down there though? Like it just looks atrocious. So I don't know the answer to that. I know none of that feels like a significant buy. Like you just need the market to prove it. You don't have to buy the exact bottom, but it's problematic currently. Do you disagree?
Hold on, sorry. I'm trying to find the Twitch chat. No, I don't disagree. My litmus tests are the cloud and the 200-day moving average. We're below both. It's no secret. The question here as a market participant for the listener, for me and you and me, why are you here as far as which type of trade are you looking for? Because if you are looking to get into a market that you believe in, the best time to do that obviously is when it's at its lows or declining. Ideally, if you're a long-term market participant. Now, if you're a short-term market participant and you're hoping for a mega turbo bounce, I'm not so sure you're going to get that, but it depends on how you view this is dependent on what you think is going to happen in the future based on your time here, your time horizon, right? If you've been here since January 2021 and all you've seen is chop, then you're probably pretty disillusioned if you're part of that scheme. But
well, that's if you're January 2021 and you're only doing like BTC and some ETH or something. If there were 2021 was a glorious year for the altcoiner.
Sure, but if I look at this chart and think, are we in like a macro bear market? I don't think so. We're still at levels we saw, like that classic joke. We haven't been here since September 2021. Have we Eiffel Towered the entirety of Q4? There and back again, a hobbit's tale? Yeah, we have. That's problematic. We certainly didn't see any strength or any volume at the top. That's problematic for bullishness. So yeah, are we bearish right here as we sit? Sure, of course we are. But we're also in this huge range from 30 to 60. That's going to look stronger or weaker depending on which quadrant of that range we're in. If we're above 50, we're looking okay. We're below 40, all of a sudden we're in trouble again. Yeah. And if we're below 30, then we're in deep, deep trouble because that's a multi-year low at that point, or at least a year low, however you want to consider that. So to say are we in a bear market since November? Yeah, sure. But you have to put a timestamp on that, I think, to say saying we're in a bear market to me sounds like we're going to be in a bear market for the next 12 months.
Yeah.
Maybe, but I don't see that necessarily as we sit here right now. Does it look great? Of course not. Does this look like a potential head and shoulders? Yeah, it does. And where does that measure to? That measures all the way down to sub
0.
Sub 25 or thereabouts, right? We can keep zooming out, the classic everything's fine mentality. If we keep zooming out, most of the volume isn't until like sub 15, 12, right?
Yeah. Don said on Weekly Open that his prediction for the year is that we would just bounce between 30 and 60K and ruin everyone, right? Like by the moment you think it's like dead and done, then that's finally when it just goes back up into the range and stuff. So yeah, I mean, and that could happen here, right? That can go from here to the red box, and then I'm like, Josh, we might make it. We might get back above, and then we go back to the volatile range. It's just like you crush people through range trading rather than trend trading, and that would hurt certainly.
So I look at this and think we're okay here. I don't think the time to panic. if you're margin long 100x from the top, you're liquidated and you're done, right? So it depends on why you're here and what you're doing. But for most of us who've been here a while, this isn't that big of a deal. Is it more bearish than bullish? Of course. We're down 40% from the top. At what point do you say to yourself, yeah, we're bearish now?
Can I share?
We're just,
yeah.
I'll just say we're just as bearish as we were in, May. That recovered. Not saying we'll recover again, but
yeah, but if I went back to my May 2021 net worth today, I would be very sad, right? Like I had a good,
of course, because you've normalized your net worth.
Yeah, new net worth
up here,
higher. Yeah. So I don't want to lose those things, and also, something. Pull out your bingo cards. It's a new year. If you realized any gains last year and you're an American or many other countries as well, then you owe taxes on what you realized in 2021. I had this realization where, I had risked off to where I was able to pay my taxes, right? I did that December 31st, January 1st, whatever. Took enough off the table to where I was not going to get stuck like in a weird tax situation if the market tanked. What I didn't realize it was if you do the math on, okay, you take, say, 40% of your net worth and you set it aside. Now you have 60% left. Let's use some numbers. Let's say $100,000, okay? So you have $100,000. You just pay of realized gains, and that's your net worth. Let's say you started from zero. Now you have $60,000. Now with that remaining $60,000, because you're giving $40,000 to Uncle Sam, the market goes down by 2/3. Now you have $20,000. So you paid your taxes, and then the market goes down 2/3 while you're exposed with the rest of your money. And it goes down by 60-something%, and now you only have 20% of your all-time high portfolio value. You've lost 80% of your in my brain net worth. That is too terrifying for me. I don't want to do that. I don't want a 66% drawdown with what I'm left exposed. And therefore I was like, all right, no thanks. I will wait for good setups, preserve my buying power as a whole, maintain some upside potential, but I don't need to be exposed with 100% of my post-tax net worth to a crypto market that is uncertain at the best. So that was a realization for me to just not. You don't want to make life-changing money and then turn it into 20% of that life-changing money. You know what I mean? And
that's why you just always hodl. You hodl and you biddle.
Zero.
And you never let go.
What I would rather do, let's take the same example. So you have the $60,000 is take 40,000 of that 60,000. It sounds insane. Take 2/3 out. Put it
not investment advice, by the way.
This is my personal theoretical thought.
Okay.
Right. Take the 40 out of the 60, take it out of the market. It's unexposed. I'm yield farming it, or I'm saving it, or reinvesting it elsewhere. Now you still have that same 20% as if you're wrong by staying exposed. And now you can play a little more aggressively without feeling like total L season if the market does go down, because if it goes down by 60% now, you're losing the 20 that goes down to 12, right? You're not losing 40. I did a lot of fractions there. I know that's hard for some people, but I hope that makes sense in terms of my line of thinking. And then if the market's super risk on and
are you fraction splaining? Is that what you're doing?
I did. And if you're like, everything goes bananas, you hit all the rotations right, you make multiples on multiples on multiples. Your first kind of roll of the multiples, you'll kind of get back to where you are, right? Like you get some altcoin that you're exposed to goes up 2x or 3x. Like you'll feel more confident than redeploying the other part. You'll feel the recovery of Ethereum and Bitcoin or whatever you're trading, and you'll find your way to success if the market doesn't die. If the market does die, you're preserved, which is it's just the situation I would rather be in. And this took a little inward thinking, and therefore I risked off a good bit. Not all the way, but a good bit. People can call it cope talk all you want, Rich, but as I said on Twitter this morning, I have survived before and I will survive this time. You are welcome to stay completely and fully exposed to this market. And if you are wrong, you will not survive. You will be gone and I will be here and I'll pick up the pieces as the market recovers off of the bottom, which you've panic sold or been liquidated upon. So have at it.
I do think it's a tough market to be risk on, especially on leverage, especially if you're long, but you're also at risk if you're short here because we're down so much so fast that the question I always ask is like, what is it going to take to keep us going down more harder, right? Like, is it news? Is it miner selling? Is it an exchange hack? Like, I don't know, like any of that stuff could happen, right?
Yeah. If stocks go down and we create additional correlation, stock market is closed the week, and it hammered it. Like, it looks horrific on the weekly close. Like, the stock market was down only this week. Started high and then just worked its way down. That is not a pretty weekly candle. So
yeah, Legacy's just been super brutal after those FOMONC minutes or whatever, rate hike talk.
Yeah. So if there's correlation, if there's some reason for stuff to happen in crypto, like narrative within crypto, there's plenty of reasons why we could go down. I think people are largely still exposed in crypto and levered in a variety of ways. And I think if more people, like, let's say they lose 30% of their net worth and they're like, they kind of have the same realization that I did, but later, and they say, I need to get back to quality or something. And then like you see a concentration of asset flows go from down the risk curve back up to relative safety. And it's not necessarily enough to give those a strong bid, but it's enough to get people out of the risk assets and stuff that you thought, oh yeah, it's fine. It's been up. And then all of a sudden it's down 70, 80% further down the risk curve in altcoin land, even if Bitcoin's only down 30%. But then what if Bitcoin capitulates? There's a lot of like hidden leverage out there. Hidden leverage being essentially down the risk curve altcoin exposure, even if you're not technically levered. Yeah,
there's a lot of DeFi lending and borrowing still that is probably problematic, more so than like Bybit OI, I think even. It's all of it collectively is going to have a massive effect on liquidation cascades and things like that. But I don't know, for me, the DeFi stuff sticks out.
Yeah.
More so than like Bybit or FTX. OI, which a lot of people talk about nonstop, or like these bids on Bitfinex and Bitstamp or wherever they are that have been there for weeks. This bid block we're hitting in, right? Like that can disappear, and then what, right? So I don't like watching that and thinking, oh, this is what the order book is telling me. We're going to be fine, because that can just disappear. That can be all Fugazi, Sahara, or whatever the word I'm looking for.
Josh.
Mirage.
We've talked about price levels, but what about velocity of downside? So Dale asked, is a nuke or a slow grind down more bearish in terms of how to, the longer term recovery potential? Would you rather see a nuke and blow out open interest and all that, or would you rather buy at the bottom of a grind down?
I mean, this isn't what I want to happen in the near future, but it's always better to see a nuke, because that is like, look at the Corona candle. Yeah. Okay. Like, you don't want to see, like, I don't want to see people get hurt. I don't want to see people lose money, but people get liquidated. People get forcibly removed from the market, OI goes to nothing, and then we can, burn the forest floor and start anew from there, like a phoenix from the ashes. Okay, that's what you need to really reset. Like everybody mentally says, okay, right? Like the momentum can't get any worse than it was the other day. I feel like we're almost there, and we certainly got there in May after a month of that, where even after that we still had this droop. But you always want to see some clear direction one way or the other. I don't want to see the market like hesitate. Like seeing it not bounce strongly from 41 seems problematic to me.
Yeah, I mean, we're at a kind of weekly level on BTC right now. That, like I said, it could create a range trade from here, and it looks like everybody sold the bottom. Ha ha ha, bunch of idiots. But it doesn't really equate to like a fast recovery or anything. If we lose that quickly and we push down into kind of the summer 2021 range, that takes you into the 34 to 38 type of stuff. And I think one of the things that's probably going to help drive that conversation is just macro stuff. Like Fed decision making is part of everyone's talk now, right? Like, it's bear market talk when we're worried about like the FOMC meeting notes and are we going to taper? Is the Fed going to stop buying equities, or are they going to raise rates? Historically, that's had an impact on the market, and it can certainly add velocity, both to legacy markets and follow-on effects to crypto. Crypto has largely been treated as a risk asset, even Bitcoin, within those sectors. So if there's like additional surprises in terms of tightening or hawkish Fed policy, surely that could be the type of thing that turns into liquidation candles, huh?
Yeah, I mean, the correlations have been basically 1-to-1. No, not actually, but 60+% correlations with legacy in a lot of ways. So if legacy says that's it, then crypto is unlikely to be safe from that. And that includes everything in crypto. The more risky it is, the higher velocity it's going to decline for sure. Yeah, it is Satoshi's nightmare, because I was talking to a lot of people about this week. Certainly not the reason why I'm here or was here initially, to like move along, to get along with Wall Street and correlations and like that. And the classic Bitcoiner likes to tout this narrative that come join this uncorrelated asset. Like, yeah, at times historically that has been the case, maybe more so than not. But when you see headlines like Apple beat Bitcoin in 2021 as a return, that isn't an attractive story anymore for traditional finance people, in my mind. They want a clear reason why Bitcoin is an option for them.
Yeah.
You're talking about legacy people. Now, crypto people are like, I'm here, I'm not leaving, I don't care, right?
but who's the buyer, right?
Right now, up here, it's definitely feels like it's been Wall Street for sure.
Yeah, and El Salvador buys like 4 Bitcoin at a time. That's not really impactful. It's important for a nation state to be putting it on their balance sheet, but like, you got a pretty weak nation state doing it, and it's not exactly like bringing other people to the table, like at least in the public yet. Crypto Cabbage brought up a good point, which is this is literally July all over again. Same talking points, same fear. Ledger was talking about going risk off then because he already had a good year, which is true. And by that point, like my year was less good than it was before after that grind. And then the other element of that is I was able to identify that the market at a point where it was most likely to puke didn't, and therefore started moving up. So like to here, it was like fear, like tinier and tinier little pumps, breakdown. And then when it recaptured it, boom, recaptured the whole thing. And it was like, oh, look, we found our liquidity. It took all that fear and then 2 days of finding where the bid was, and then it recovered, and then it was basically up only, a little bit of while worry action, whatever. From there, well, I was able to respond to that. It was fine. And
yeah, whatever. Just ignore those people. They give me the same crap. Welcome to range trading, folks. Enjoy your stay. Yeah, hopefully you're not here for 10 years. But the thing about July was...
He had a point. It is similar. And your response is to be similar. That's fine. Because if it nukes, you don't have to deal with it.
Yeah, I mean, it's called risk and understanding it. The thing about July, one of the bigger reasons why we actually did what we did, you could say there was a short squeeze. I think there was, I guess. But from what I remember, it was that mega options buyer who came in like on a weekend, right? Like some low liquidity event. So I'll take that. I'll take tomorrow. Tomorrow I'll watch the tape for options trades. If there's some massive options trade on Derivate to save us, I'll take anything at this point. Yeah. Like what bad news has hit? Maybe this congressional hearing on mining, but Kazakhstan, I don't know. I don't know if you could point to news here and say like it's been the news. Not that anybody's doing that, but I don't really see. Everybody always wants a reason for something happening. I don't see anything in particular here for ETH or BTC. I mean, ETH, the narrative this week was ETH 2.0 is coming, right? This year, potentially. And so that should be bullish, right?
Yeah, I think that's actually a reasonable thing. I really do think it's a nice justification. I don't know. I want to...
where's the ultrasound money people? Where are they? Did they have money on the sidelines? What's going on here? Let's talk. Yeah, the flippening ETH BTC looked worse and worse and worse this week. ETH just quickly lost. This is the problem with not listening to BTC or paying attention, which is what I did this week. I was like, oh, ETH looks fine. It'll be fine. And then it's down like 20% in 3 days, right?
Yeah, that was pretty brutal. Like
20% in 3 days.
ETH was acting significantly different than BTC, and then all of a sudden it was like, oh yeah, I'll just go play catch up now. It is worth noting. So we kind of promised on the last show or on Weekly Open that you and I would talk more about pivots on this show. New year, new pivots. This is something we've talked about for many years in a row. Can you walk us through pivots? And then, interestingly enough, on ETH, we already hit the first one.
My first thought when I see that is that's a long way down
to the S1.
Yeah. Pivots are somewhat voodoo, somewhat not, but a lot of people look at them just like anything else in TA. They're based on the highs and lows of the previous year. They're mathematically calculated around the P, the pivot specifically, and then above that's resistance, below that is support. In crypto land, we do tend to hit these levels, in my opinion, rather frequently and acknowledge them in some way with support or resistance. You can go through this and backtest it and say like, it didn't do this here, it did it here. This is useless, whatever. But if I see this like in the now, looking at this, and I see us bouncing on a pivot, I'm like semi-optimistic, right? But just like as we lost the 200-day moving average 2 days ago on ETH, if we lose this pivot, I look to the next one down like a ladder. The next rung
acceleration
is 1350. Does that mean we're going to hit that this month or in 6 months? No, but it could be this cycle's bottom. It certainly was a cycle bottom for BTC in 2018. And that one printed January 1st that year, and we hit that S1 pivot in that year. So certainly something to watch for.
Literally, it was the bottom.
Add this to your toolbox of stuff.
It took all year. But yeah, Bitcoin went to the price or to the, what's it called? Yeah, the primary pivot P, and then treated it as resistance, and then spent the entire year in the middle. And then when it finally bottomed, it went exactly to the S1, which is also the 200-week moving average. Interestingly, The 200-week moving average is once again lining up to fit kind of alongside where this S1 is. 26K for BTC, and as you mentioned, I think it was 1,300 for ETH. Do I want that to happen? Do I want a bear market? No. Would I go all in at the S1/200 week if those end up aligning alongside price action? Absolutely. And would I rather have the ability to buy ETH at 1,300 and Bitcoin at 26,000 than holding all the way down? Absolutely.
That would be ETH BTC to 0.05, right? 13 and 26.
Ooh. Yeah.
Or 1.3 and 26.
Yeah.
If my math is correct.
Yep. And it would 0.065 would be this, but like they could reach 2 weeks apart or something. You know what I mean? Like
it doesn't have to be at the same time for sure.
Yeah, but lots can happen on the relative pair. But I don't know, man. I have to address the market as it presents itself to me. The one we want to look at pivot. We should look at the upside of the pivots in a minute.
I was going to say when you're in range, when you're in a range, right? You look at the range. When you're in expansion or contraction, you look at the top side and the downside relatively. Right now we're in this downside narrative.
Yeah.
So we're looking at the downside. Like that's just the way it is.
Yeah. The things that are the most actionable historically for me and my peace of mind, etc., are currently telling me to not be exposed to the market. So given that, I'm actually still too exposed. Like I'm still exposed to the market despite how I sound. I'm just less exposed, right? But these are telling me essentially sell bounces and then buy confirmation. And of course, you're not capturing the Pico bottom or selling the Pico top or any of that, but you are preserving your relative buying power overall, and you would buy strength if it appears. And therefore, that's the plan that I need to follow for myself and for my family and my personal situation. Now, that's the downside. End bear market episode. Enter hopium episode. Okay, we'll do half and half. Josh, let's talk about potential upside. If we reverse, if we, recapture trends, where do you see confirmation? What would be upside potential in your mind if we do recapture trend? What kind of targets could happen for Ethereum and Bitcoin in the long term this year? And then we'll finish the show on some of the narrative sector type stuff within altcoin land.
Yeah, so I still think ETH looks okay. Mm-hmm. It doesn't look, it's down 20% in 3 days, right? But I don't know. Again, it's in the range. It's in the 50%. It's holding the 50% level of the range. So at the very least, it's got that foot going for it. It's got VPVR support, volume stuff going on. This isn't me just looking for stuff to be bullish about either. This is the MAs look terrible. Everything looks tragic. BTC looks garbage. This is setting itself up for a death cross. The first death cross since way back, since May 2020. Okay. So the silver lining there is if it crisscrosses, then I'm gonna go long again. And you might get burned like you did in March 2020.
Yeah.
But eventually those crosses that are correct pay off for the ones that aren't, right? So there's that. And I still like 6 to 7 eventually. I don't know.
Yeah. I've been wanting 6K for a year. It's kind of disappointed we didn't get it, to be honest.
I don't know what that trajectory is going to look like now, but ideally, if this still is some sort of Frankenstein cup and handle thing, then we do some sort of VU thing. I don't know. This chart it's such a mess at this point. It's hard to even how do you prognosticate.
How do you get over 42 to 4,400 though without the price expiration? That would be pretty shocking.
We did it once, basically.
I know, but that's what I'm saying. Third time, I don't know, man. That seems unlikely, right?
Yeah. I mean, it feels like the entire market, volume wise, is missing a participant. And arguably it is. It's China. China's gone for the most part, legally anyway. And it certainly feels like that. It certainly feels like, you set the dinner table for 5 people and 4 people showed up, right? There's this like empty spot. Nobody is eating the food. I don't know. It's weird. It's weird. That's going to have effects in DeFi, certainly, definitely in BTC and ETH. But so I still like 6 to 7 for ETH. For BTC. What is upside for ETH? What is the pivot again up there? Let me look.
The upside pivot is 68K is the R1.
68.
Mm-hmm.
So it's not even a new all-time high. So 88. Well,
it's like
88.
Barely.
Is 8 a good or bad omen for?
That's the R2.
Right. What is that? I forget the Asian.
That's the that's
that's the good one, right?
Yeah, Suzu talks about these. Like that's one of his most important numbers or whatever.
So we got that going for it. We got the cliff high target of 88888 for those of you who know who that is. Until we're above, like you said at the open, basically, until we're above this level of 52, this thing is untouchable to me because it's got this head and shoulders potential. You can't not see it. It's a mess. Yeah. But I will sit this out until we're above this right shoulder, especially because you've got a death cross and you could say, Josh, there was a death cross in July or June. It was the bottom. Okay, great. I also said this was a descending triangle and this looked like death and we were going to go to wherever we were going to go at that time. Right. And it didn't happen. So I'll be happy if it breaks up. I'll be elated.
Can I just read the chat where C137U summarizes 2021? BTC went from 3K to 69K. ETH went from $80 to 4.6K. Well, I guess this is 2020 and 2021. There's millions worth of JPEGs and NFTs being sold. I think there's billions, bro. Doge went over 90 billion market cap. SHIB went to 40 billion market cap. Luna went from 12 cents to $103. Solana went from 50 cents to $259. Tezos went from 35 cents to $9. You really had to plug that last Tezos one. It was all convincing until then. And he said, pack your bags.
Doge is still 20 billion.
Yeah.
Top 12.
Now the chat's saying we're still early. All right, sorry. This is supposed to be the Hopium episode. So I'm going to turn that into Hopium. The Hopium for that is that on a relative basis, the majors did not do very well, and the risk-on stuff did very, very, very well. One way for liquidity to flow would be the money leaving some of those trades that worked and going into new trades, going into new altcoin trades, perhaps going back into majors where people want to own something that's not cash, because inflation is still real, Josh. Inflation is real, and the target for inflation is quite high. So
I think anybody who's been grocery shopping over the past 3 months has understood the reality of that.
And the problem is, Bitcoin, Ethereum kind of front ran that. And then on the tail end of it, we're seeing oil do well and, like copper do well, more boring stuff, whereas Bitcoin's kind of getting sold off at like a risk asset. So the question is, will the crypto market participants treat Bitcoin and perhaps Ethereum as more sound money, but not cash, right? Where you're a little too scared to be in Solana anymore, but you're happy to be in Ethereum and ride the train that Ethereum is on.
I don't know. I don't know what to say. I'm not going to disagree. Like we need, look at dominance. Basically what you're talking about is dominance. Let me pull up that chart. Did that make a new all-time low?
Probably. It seems like it's always making all-time lows in the past year.
Kinda. Not really. It's not a new lower low. I don't have so I'm not an altcoiner, right? I don't think that's a secret, but I don't have good vibes about the market when we are below the 200-day moving average on dominance, because to me that represents the least common denominator strength, which is like scratch off lottery tickets, just max stupidity, left side of the curve, intelligence type stuff. I don't do well in that because I look at that and I say, this stuff's pointless, has no value, it's trash, and it goes to infinity anyway, right? But to me, that this says that we have all this stuff still in the market and it hasn't come back to reality yet. You know, like I said, Doge at 20 billion, go down this list. And it'll make you queasy in the stomach if you've been here for a while. It's SHIB, 16 billion, right?
16 billion, and that's at being wrecked.
Yeah. Like most of this list for me is virtually unrecognizable from things that make sense to me that have value. So I don't know, man. I don't know. There's a lot of the unfrothening still needs to occur on a lot of this stuff. Near, I don't know. All this stuff is just...
Well, Near is one of those. There's a bit of an attempt, at least, at a rotation trade again, kind of...
ICP, 6 billion.
Yeah, Internet Computer, the former Definity. Up 25% in the last 7 days, naturally. Near and Cosmos and a couple others that are trying to do this like continued rotation trade. And I just wonder if it's like, yeah, let's just, do the thing that worked again. Let's roll it again. Let's go to a new set of L1s. It'll be fine. Or is this like the weakest one and everybody bails on it early? I can't figure it out, but it's worth mentioning. If you look at all the trades that are out there, man, I tell you what, Atom and kind of the Cosmos world is one of the strongest charts by far. It's basically at the highs, showing strength on the day, showing strength on the week, showing strength on relative pairs. This is a potential inverted weekly head and shoulders for you, Josh, on the ETH pair. If you see my screen.
Would you look at that? Yeah, that looks pretty good.
Yeah. It's like, if you're going to hold ETH or Matic, well, this tells you to hold Matic, right? It's like...
Is that the Saka effect?
Hisaka is definitely part of it, but he's not the only one. There's seen several people on it. This one interested me because it's not just a rotation trade. Like I've seen Paradigm like pounding the table on Cosmos Tech. I think it fits into the multi-chain thesis, and I think if you're going to have a rotation narrative this year, I think the best one is multi-chain, multi-layer, interoperability, etc. Link is doing stuff in that realm. One of my investments, Layer Zero, is very hyped doing that stuff. Cosmos is kind of inherently built into their ecosystem. They're all connected through the Cosmos SDK or whatever, and some acronym I can't remember to connect them all. And Layer 2's trying to launch and get traction on a per app basis, or like generic L2s or whatever, but essentially seeing all that stuff play out in the Ethereum landscape. I think if we're going to get a narrative in 2022 for what to rotate to, I think multi-chain, multi-layer, and interoperability amongst them is a hugely high value narrative.
I don't want to be wrongly bearish about it, so I won't say anything. I just don't understand. Like, we're connecting like all these empty highways, we're connecting empty cathedrals to each other.
They're not as empty as they've been before. We're seeing...
That's fair, because ETH is falling apart at the seams from fees, right?
Yes, I mean, basically, because of that, there was way more traction, for instance, on Solana and on Avalanche, as a couple of examples, than there ever was on the 2017 ETH killers. I don't think EOS ever had any usage, whereas ADA is more EOS style, and I think those will be punished. But we are definitely seeing people willing to transact on alternative layer ones and participate on alternative layer ones because they can't afford to be on ETH. which is fine. That's fair critique for ETH. And I think that, I think the multi-chain narrative is quite strong. You know, the money, if on the whole, it's kind of working its way out of the system. If you're going to have sector pumps, then you basically need everybody left to agree, you know, or else it spreads out too far and it doesn't work very well. So, yeah.
Yeah, it just feels like there's too much dilution based on appreciation left in the market. Like all this stuff is still up so much from last year, you know? It's like, yeah, okay, it's reasonable that it comes back to reality and mean reverts a little bit. Matic still looks fine to me. I don't know. Not like it's mega longable up here or anything, but Matic is one of the few that looked okay. Curve again, you know, we keep talking about the same old stuff. But it's not making lower lows. You can say that much about it, you know, versus all this other stuff that is just bleeding. And I'm sure the ETH charts look really good as well.
Yeah.
One other thing I noticed this week was BNB looked identical to ETH. I know we've talked about that before, but the ETH and BNB chart, the correlation has to be like 1-to-1, like 100%. Like it's bizarre that it looks like it does to me. But you can't not see the ETH chart when you look at this.
That's one of those charts that I just forget about. Too.
Yeah.
And I don't know why. I just do.
There's a lot of these, Brian, on this list that I only realize exist when I look at the list, you know?
Yeah.
they're just not in my mind space.
Like VeChain. What was VeChain?
Like,
Theta.
Like Harmony.
Network.
What the hell is Harmony?
Theta Network, $4.2 billion valuation. Clayton, never heard that one in my life. $3.4 billion valuation.
Flow? Don't know that one.
You know Flow.
Gallo? I don't honestly. Quant? These could be completely made up. You know, people get a list of stuff. They're like, you know, which one's fake?
Flow
I would have no
like
idea.
The Dapper Labs stuff. It's an NFT blockchain thing.
You could put any name on this list with any valuation, and I'd believe it at this point.
Now, eCash, I've never heard of. 1.9 billion. Theta Fuel. Are these just scams? 1.2 billion. CeeLo is one that's on Coinbase. I only know because I was so staggered by like how something got listed on Coinbase I've not heard of in the slightest. Yeah, Chiliz, naturally. The Chiliz token. CHILIZ. Well over $1 billion. Somebody brought this up. You have to get outside of the top 100 before you get sub $1 billion market cap.
Yeah, I just noticed that too. They're correct, by the way. It's disturbing if we're going down. If we're going up, yeah, everybody's gonna, right? Everybody's rich and you're not, or something, whatever that saying is.
Yeah.
But when we're deflating and we see this still left in the balloon, yeah, that's problematic.
Yeah, there's expansion and then there's contraction.
Yeah.
You know.
So just to wrap it up, am I super concerned with BTC or ETH here? Not yet. We're still in the year range. It's huge. Like it's going to be okay. We'll survive. There are better times to buy than certain times. And if you're here for the long haul, you want to see lows. You want to see sub 30. Okay, let's be honest here. That's just the way it is, Brian. That's the way it is.
So this is the crypto total market cap. I believe this is across all kinds of coins. Obviously, not equal weighted. So Bitcoin is the heaviest, but
oof, man, that's something, ain't it?
Yeah, and I think this includes essentially new money creation out of thin air, like new token, new valuation, new funding. That builds into the market cap. So when this starts going down, it means despite new token introduction, the total market cap, total dollars in the system essentially are going out if this goes down. So worth watching for trend breakdown here. And as you can see, if this goes below the 20-week moving average, it's usually not good. And this is the breakdown candle. Like it fought it for a few weeks, and this is the breakdown candle. So this leads one to believe that we are in for a time of contraction in the market. and potential for caution. There will be some great trades. The chat brought up some like structured product type stuff, like Ribbon Finance as an example. We talked about the multi-chain theme.
Web3? What about gaming? Is that stuff going to survive?
I don't know about the valuations on like GameFi stuff, but I mean, I'm a big believer in Web3. You'll see some news about my own startup in the next few days. Go to flip.xyz. I think there's a lot of great technology out there and a lot to be built, but I don't know if it's built in bull season or built in buidl season or whatever. Whatever they say. Like, a lot of people were bear posting this week, Josh. Sam said something like, here's a thread on what to do in a bear market. Arthur Hayes was like, we're going to get slapped around with a 2x4 that has rusty nails in it or something like that. And Barry was like, what would be the triggers for a global financial crisis? It's like, can any more billionaires just talk about this stuff? Like, come on. Yeah.
Yeah. Well, sometimes you need a dose of reality check.
I just want the numbers to go up only forever. But it's just not the way it is. Sometimes we got to take a break. And if we take a break, if this is a break, I want to be prepared to come out of the break with confidence, strength, and buying power.
Fair enough. I think it's safe to say that DeFi won't repeat Q1 2021, though. Do you feel that?
It's very sad because I was rooting for it. I was rooting for it very strongly.
I think that might be like a once in a lifetime type thing, honestly. That was a crazy, crazy period.
It was great. It was glorious.
That's all I got.
Yeah,
Death Cross coming up on BTC. Get ready for that.
We did that
yesterday.
We did a really bad job at the Hopium episode.
We're in a range. We've been in a range for a year on BTC. We've been in a range for a year-ish on ETH, right?
Well, as long ago as Monday, I predicted 36K Bitcoin and 100K Bitcoin if we don't die, to touch both in 1 year. So hopefully I am bear spewing right now. We go to 36K and turn it around. And then we go up only, trend continuation, etc., as everyone realizes that cash is trash, but we don't know how much contraction we'll get first. We don't know how long we'll be in a range. I want 100K. I want 10K ETH. We just have to see if the market will gift us with it, and it needs to prove itself. So it can happen if we have continuation of the bull market, but we need to find the bottom. We need to turn from the bottom, and we need real buying. And I hate to say it, but that's going to have to coincide with legacy strength. And right now we just saw one of the worst, ugliest, grossest legacy weeklies in a long time. So we need narrative shift, and maybe we give it a quarter or two, let everything bleed out a bit, maintain our buying power, and we come out better on the back end of it.
Build back better. That's our show title right there.
Biddle back better.
Oh man.
All right.
We're wrecked, aren't we? We're really wrecked.
Yeah. Go to ledgerstatus.com if you want to check out old episodes, because I haven't updated the site in a while. But these do go to YouTube and Apple and podcasts and all that stuff. Thanks for joining us. See you next time. Make sure you get a username on flip.xyz. See you later.
Just run dry in a house of cards.